So let me get this straight. Bitcoin runs up towards $70,000. Geopolitics cool off for about 5 minutes, and suddenly everyone's like, all right, bull market's back on. Yeah, okay. Because right now, we've got institutional money quietly flowing in, retail sitting in fear, and Bitcoin still stuck in the same range. This market isn't confused. People are. You've got ETF inflows coming in the front door, macro risk creeping in through the back, and traders trying to figure out, wait, are we bullish or just temporarily less bearish? And here's the best part. The fear and greed index is sitting in fear, while institutions are out here buying like it's on clearance. That disconnect? That's where the opportunity usually lives. So the real question is this market quietly setting up for the next move higher? Or is this just another fake out before we go test lower? This is your SENB Daily Brief. Let's break it down.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
All right, welcome back. Let's get you dialed in on what the market is actually doing right now. Bitcoin is sitting in that $68,000 to $69,000 range after getting rejected again, right under $70,000. We saw a push earlier in the week driven by optimism around a potential Iran ceasefire, but that momentum already fading. Ethereum is right there with it, holding around $2,080 to $2,100. Not breaking down, but definitely not leading anything either. Basically, just existing. Now zoom out for a second. Total crypto market cap is hovering around 2.3 to 2.4 trillion. And here's where it gets interesting. The fear and greed index is sitting at 34 in fear. So even with price holding up, even with institutions buying, retail sentiment is still like, yeah, I don't trust this. And honestly, that disconnect matters because historically, markets don't stay disconnected like that for long. Now, from a structure standpoint, Bitcoin is still trading inside a descending channel, lower highs, compression. No real breakout yet. Every push for $70,000 gets rejected. Key levels to watch right now. Resistance, 69,000 to 70,000. Support, 65,000. If we break above $70,000, that's where momentum could actually start to build. But if we lose $65,000, that's where things could unwind fast. Now let's talk positioning. Bitcoin dominance is sitting around 58%, which tells you one thing clearly. This is still a Bitcoin-driven market. Altcoins are moving here and there, but they're not leading the charge. And here's the bigger picture. We've got continued ETF inflows, ongoing institutional accumulation, and stable price, but no breakout. That combination usually doesn't last forever. So either smart money is quietly accumulating before the next move, or we're about to get one more fake out to shake everyone out. All right, coming up next, we're breaking down the top stories moving the market right now, including what's really driving Bitcoin's price swings, the latest on the Clarity Act and why it matters, and the growing disconnect between sentiment and institutional flows. Stay with me. We'll be right back.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
All right, let's get into the news. So, Bitcoin made another run towards $70,000, and once again, got rejected like a bad cold call. Here's what's driving it. We're seeing continued inflows into spot Bitcoin ETFs, roughly $69 million coming in already this month, on top of a strong March where we saw over $1.3 billion in total inflows. So institutions still buying. At the same time, Bitcoin pushed up into that $69,000 to $70,000 range on April 6th, but then pulled back as quickly as it moved up. Why? Because this market is now trading headlines, specifically Iran ceasefire optimism. As soon as talks started looking positive, risk assets moved up, Bitcoin included. But the second that uncertainty came back in, so did the selling. And here's where it gets interesting. You've got oil prices moving. You've got geopolitical tension shifting sentiment. And layered on top of that, you've got short squeezes fueling these quick spikes higher. So what does this actually mean? Bitcoin right now is being pulled in two directions. Institutional inflows pushing it up, and macro uncertainty pulling it back down. It's basically a tug of war, and nobody's winning yet. Now looking ahead, if ETF inflows continue, and we get some stability on the geopolitical front, we could see Bitcoin hold above $68,000 and make another run at $70,000. But if tensions flare back up, or oil keeps moving higher, that upside gets capped real fast. So bottom line, institutions are buying, but macro is still in control. And until one of those clearly wins out, expect more of this chop. Coming up next, we're talking about something that could have way bigger long-term impact than price action, the Clarity Act, and why both banks and crypto firms are suddenly starting to agree on parts of it. Yeah, I know. That alone should get your attention. We'll be right back.
Some mornings start quiet. No rush, no noise. Just good people and the decision to roll forward.
All right, story number 2. And this one actually matters a lot more than most people realize. We're talking about the Clarity Act. And for the first time in a while, banks and crypto firms are starting to agree on something. I know. Take a second. Let that sink in. So here's the deal. There's a new compromise on stablecoin yield, and it basically splits things into 2 categories. Passive yield, not allowed. So you're not just earning interest for holding a stablecoin in your wallet. But activity-based rewards, still allowed. So if you're actually using the network, payments, transfers, things like that, you can still earn. Now, why does this matter? Because this has been one of the biggest sticking points between banks and crypto. Banks don't want stablecoins acting like high-yield savings accounts because, shocker, that pulls deposits out of banks. So this compromise is basically saying, fine, you can innovate, just don't compete too directly with us. And here's the key. This could unblock the entire bill. The Clarity Act has been stalled since January, and now we're looking at a Senate Banking Committee markup potentially in the second half of April. If that happens, this becomes one of the biggest regulatory catalysts of the year, because this bill isn't just about stablecoins. It also starts defining who regulates what, SEC versus CFTC, how digital assets are classified, and what the rules of the game actually are. Now, the reaction so far? Mixed. Some in crypto are saying, hey, progress is progress. Others are looking at this like, yeah, this is a little too bank-friendly. And honestly, both are probably right. So where does this go from here? If this markup happens in late April, we could see movement toward a full Senate vote. And if it eventually gets passed, that's real regulatory clarity coming into the market. And markets love clarity. But if this gets delayed again or falls apart, we're right back to uncertainty. And that weighs on everything. So, bottom line, this isn't just policy noise. This is infrastructure for the entire crypto market going forward. Coming up next, we're talking sentiment and why the fear and greed index is still sitting in fear, even while institutions keep buying. Yeah, that disconnect again. We'll be right back.
She redefined what it meant to race without limits. She proved that silence could be louder than words. Fearless, fast, focused. A reminder that champions are built on grit. That same intensity now fuels her signature blend. Roosted and roasted. Bold Italian roast crafted with the spirit of champions. Ashley's Roosted and Roasted, only at WholeShotCoffee.com.
All right, welcome back. Next up, and this one is all about sentiment. The crypto fear and greed index is currently sitting at 34 in fear. And what's interesting? That's basically unchanged from yesterday. So even with Bitcoin holding near $68,000, even with ETF inflows continuing, even with institutions buying, retail sentiment is still like, yeah, I'm not convinced. Now let's put this into perspective. Just last month, we were down at 18, extreme fear. And earlier this year, we actually hit a low of 5. That's full panic mode. So yes, technically sentiment has improved. But let's be honest, we're still nowhere near confidence. And here's the key takeaway. We've now been in this fear to extreme fear range for an extended period. That's not normal in a strong trending market. But what is normal? This kind of divergence. Because right now, you've got 2 completely different realities. On one side, institutional flows, ETF inflows, accumulation. On the other, retail sentiment stuck in fear. It's like the market is saying one thing and people are feeling something completely different. And historically, that gap doesn't last forever. So what happens next? If Bitcoin stabilizes or we get positive catalysts like regulatory clarity, you could see sentiment start to move out of fear pretty quickly. But if we get another leg down or more macro pressure, that fear can turn right back into capitulation. And that's the moment you always have to watch. So bottom line, fear is still in control of sentiment, even while money continues to flow into the market. And when those two finally align, that's usually when the real move begins. Coming up next, we're talking about who's actually buying right now, because while sentiment looks weak, some very big players are doing the exact opposite. We'll be right back.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
All right, story number 4. And this is where things start to get very interesting. Because while sentiment is sitting in fear, institutions are still buying. Let's start with strategy, formerly MicroStrategy, led by Michael Saylor. And yes, still doing exactly what you think they're doing. Buying more Bitcoin. They recently added another chunk, bringing total holdings to roughly 767,000 BTC. Let that sink in. That's not trading. That's not, we'll see how this plays out. That's a full-on conviction strategy. And it's not just them. You've also got continued ETF inflows, corporate treasuries holding, and institutions steadily accumulating in the background. All while price is basically going sideways. Now, why does this matter? Because every time Bitcoin dips, there's a buyer. And that's how floors get built. Not with hype, not with retail FOMO, but with consistent accumulation. Now add one more layer to this. We've already crossed over 20 million Bitcoin mined, so the remaining supply, getting tighter, which means every time institutions buy, they're not just adding exposure, they're removing supply from circulation. And that's the scarcity narrative everyone talks about, actually playing out in real time. Now, does that mean price goes straight up? Of course not, because in the short term, macro still matters, liquidity still matters, and sentiment still matters. But long term, this kind of accumulation is what builds the foundation for bigger moves. So, where does this go from here? If institutional buying continues, you're likely looking at a stronger price floor under Bitcoin. But if price drops too far or funding conditions tighten, there's always the risk that pace slows down. So, bottom line, retail might be uncertain, but institutions, they're still positioning. And when those two eventually line up, that's when markets tend to move the fastest. Coming up next, we're wrapping this up with what's happening across altcoins, including XRP, Ethereum, and why regulatory momentum could start shifting attention away from Bitcoin. Finally, maybe. We'll be right back.
Monday morning starts here, coffee in hand, ready for the grind. Leaving the bike behind, chasing the week ahead. Fueled by the passion to ride and the coffee that gets us there. Whole Shot Coffee. Fuel your life.
All right, final story for today. And now we're shifting over to altcoins, specifically XRP, and what's happening across the broader market. Right now, XRP is trading around that $1.30 level. Not exploding higher, not breaking down, just waiting. And what's it waiting on? Regulation. Because XRP is one of the assets most directly tied to what happens next with the Clarity Act. If that bill progresses and we get clearer classification, especially around payments and commodities, that's where XRP could actually benefit in a real way. And the market knows that. So what you're seeing right now is anticipation pricing, not reaction. Positioning. Now zooming out, Ethereum and most altcoins are still doing what they've been doing, following Bitcoin. Market cap is sitting in that $2.3 to $2.4 trillion range. And until Bitcoin makes a decisive move, altcoins are basically just along for the ride. But here's where it gets interesting. Historically, April has actually been a strong month for XRP. Average returns around plus 24%. Now, does that guarantee anything? Of course not. But it does tell you something important. When sentiment and narrative line up, XRP can move fast. So, where does this go from here? If the Clarity Act moves forward and regulatory momentum builds, you could see XRP start pushing toward that $1.60 to $1.80 range. But if we get delays or more uncertainty, that price can just as easily drift back toward $1.20 support. And for the broader altcoin market, everything still comes back to one thing: Bitcoin dominance. If BTC keeps leading, alts stay muted. But if dominance starts to drop, that's when you start to see rotation. So bottom line, XRP and altcoins right now are coiled, not moving. And what unlocks that move? Regulation and Bitcoin's erection. All right, coming up next, it's time for the Proof of Thought mailbag, where we answer your questions, react to your takes, and occasionally roast you just a little bit. We'll be right back.
You're listening to the SENB Daily Brief, Powered by Whole Shot Coffee.
All right, it's time. Proof of Thought Mailbag, where you guys ask the questions, and I try to answer them without losing faith in humanity. Okay, first question is from @DipBuyerDan, and he asks, Sen, if institutions are buying, why isn't price going up? Ah, yes, the classic, if number not go up, something must be broken. Here's the reality. Institutions don't chase green candles. They buy into weakness. So while retail is waiting for confirmation, smart money is building positions. All right, next one is from @MacroMike_87. And he wants to know, is Bitcoin still following macro or is it decoupling? Oh, it's following macro, like a lost puppy. Oil moves, Bitcoin reacts. Rates expectations shift, Bitcoin reacts. Geopolitics flare up, Bitcoin reacts. Decoupling? Yeah, maybe in the marketing brochure. Okay, @Altcoin Annie wants to know, when do altcoins actually start running? When Bitcoin stops being interesting. Right now, all the attention, all the liquidity, all the narratives are sitting with Bitcoin because alt season doesn't start when you want it to. It starts when Bitcoin gets boring. We're not there yet. All right, @Fearful Frank wants to know, of course you do. He asks, should I be worried that sentiment is still in fear? Short answer, only if you like buying tops. Fear is where opportunities usually show up, but it can stay in fear longer than people expect. So no, don't panic. But also, don't assume it flips overnight. All right, next we have @ChartWizardX and asks, is this a bull flag or distribution? Yes, that's the honest answer right now. We're in a range, we've got accumulation signals, but also lower highs. Until we break above $70,000, then bullish continuation, but below $65,000, then likely distribution playing out. Right now, it's undecided. Okay, last one for today is from @10KDoles and says, I totally agree with you. The so-called bull run didn't happen, so all the hype faded away. Ah, yes, the if it didn't go straight up, it didn't happen theory. Let's clear this up. The market didn't disappear. Participation did. Crypto Twitter activity dropping 90% plus? That's not because crypto died. It's because excitement follows price. So, when things are ripping, everyone's a genius. Everyone's posting charts. Everyone's got a thread. And when things chop sideways for months, silence. And that's exactly what we're seeing. So no, the bull run didn't not happen. It just didn't meet expectations. And here's the part most people miss. The market doesn't reward hype. It rewards patience and positioning. So, while everyone waits for confirmation, the next move is usually already being built. Just not on Twitter. All right, coming up next, we're wrapping this up with the final thought and what you should actually be paying attention to right now. Stay with me.
Our beans are washed in ancient waters, filtered through coal seams deep beneath the Utah mountains. Okay, not really. We totally made that up. But it does sound badass, doesn't it? Here's the truth. Premium Guatemalan beans, aged for 30 days in real whiskey barrels, then carefully roasted smooth in the golden light of California, inspired by the legendary Drunkard's Wash Desert Race in Price, Utah. Bold, smooth, with a subtle touch of whiskey and oak. Drunkard's Wash. Whiskey barrel aged, bold and unmistakable. From Whole Shot Coffee Company, fuel your life.
All right, let's wrap this up. Here's the reality of this market right now. It looks boring, it feels uncertain, and most people have already checked out. Bitcoin is stuck in a range. Altcoins aren't doing much. Sentiment is still sitting in fear. Not exactly the stuff headlines are made of, but this is the part most people get wrong. This is where markets are built. Not during the hype, not when everything is going vertical, but right here, when nobody's paying attention. Because while things feel slow, under the surface, institutions are accumulating, regulation is progressing, and supply is getting tighter. That's not noise. That's structure forming. Now, does that mean we go straight up from here? Of course not. We're still dealing with macro uncertainty, geopolitical tension, and a market that hasn't fully picked a direction yet. But zoom out, the pieces are starting to line up. And historically, when sentiment is low, when participation drops, when things feel slow, that's usually right before things get interesting again. So, the question isn't, why isn't this moving faster? The real question is, are you positioned before it does? All right, that's it for today's SENB Daily Brief. If you got value from this, make sure you're subscribed, following, wherever you're watching this, and I'll see you right back here for the next one. The SENB Daily Brief is a production of SENB Hero Media in collaboration with Whole Shot Coffee, coffee that fuels champions. Written and hosted by yours truly, SENB Hero. Production, editing, and scheduling handled by Maya Valencia, who somehow keeps me on time, caffeinated, and occasionally polite. Original theme music composed and produced by Paul Hahn, the community legend whose beats hit harder than a Fed rate hike. Research support provided by the SENB community. Proof that sarcasm and spreadsheets can coexist. For more shows, merch, and on-chain chaos, visit SENBHeroMedia.com. Thanks for tuning in. Stay caffeinated. And remember, if it's not in the brief, it probably wasn't bullish anyway.
Set my wallet free.